Hello everyone, this is Jeevakan. In today's video, we'll look at how far Nifty might fall from the current levels and which is the probable area it might take support in the upcoming days. Many people would be in panic right now, thinking how far down Nifty might fall from the current level or might not be able to properly interpret the current fall as well. So we'll just analyze Nifty in detail and see if there's a crash incoming or we need to look at this fall from a different angle. So we'll just go right into the video and analyze these things in detail. One thing which I really believe in real life or in stock market is we need to look at things from a bigger picture. What do I mean by that? We need to zoom out. What do I mean by the term zooming out? Zoom out in the sense we need to analyze Nifty with its larger time frames. So we need to analyze Nifty by looking at its weekly or monthly time frames in order to get a clearer picture. Basically, we can dissect Indian stock market into three different phases. One is 2003 to 2008 bull run, where we had a massive bull run followed by the Lehman Brothers crisis. And the second is 2008 to 2020 bull run, where we had a decent bull run followed by the coronavirus crisis. And the third phase is what we are having right now from 2020 to till date. What I've done is I've just backtested the data from 2003 to 2020 levels, and from backtesting these data, we can come to an approximate conclusion on how far Nifty might correct in the upcoming days. So we'll just analyze these things in detail by analyzing the Nifty monthly time frame. First, we'll analyze the amount of returns Nifty has given in 2003 to 2008 rally. From swing low to swing high, Nifty has given almost 600 plus percentage in 5 years. But important takeaway is that rally between 2003 to 2008, Nifty has corrected many times. It has corrected almost 6 times in the phase between 2003 to 2008. I mean a major correction. The correction was fast and furious, and it didn't even last for more than few months. So if you can see in this tabular column, there were 6 corrections, right? First correction was 34.5%, and second correction 12.8, third correction 12.6. There were almost 6 corrections during this 2003 to 2008 rally. It was actually a dream rally where many people made humongous returns. And the next phase between 2008 to 2020, Nifty has given almost 450% from swing low to swing high. This phase as well saw almost 7 corrections during this phase. So if you can see in this tabular column, there were almost 7 corrections. Correction 1 was 28%, correction 2 17, correction 3 23.8, correction 4 11. So there were almost 7 corrections during this phase. From these historical data, we can say that Nifty has corrected at an average of close to 20 to 25% in the course between 2003 to 2020. So we can easily say that the current corrections might range from 15 to 25% easily. So every time when Nifty rallied more than 100%, there was a healthy correction of 15 to 25% or even 30%. Coming to the current situation, Nifty has rallied 145% from previous swing low to swing high. So it is evident and normal that it might correct a little. So it is in the correction phase right now, and it has corrected more than 15% already. Max it can correct up to 20 to 25%, which is 15,500 or 15,000 levels, which is still a healthy correction. And that important resistance trend line also comes somewhere around 15,000 levels. So it is still a healthy correction for Nifty to correct 20% after moving 150% from previous swing low to swing high. My plan would be to accumulate good stocks at important support zones. Important support zones like 15,700, which was the previous support a few weeks back. And the next important support zone comes at 15,000, which will be a pullback for the monthly trend line. So I will be adding more positions when Nifty comes to 15,700 and 15,000 levels. If Nifty closes below this trend line, which is not likely to happen, I would stop adding more positions until Nifty comes to a clear uptrend. One more important thing is that whenever Nifty hits a new high and when it's in its correction phase, during 2003 to 2008, the correction lasted for just 3 months max, which means for every 3 months we were seeing new all-time high, which means the corrections was fast and furious. And whereas from 2008 to 2020 levels, the correction duration lasted for even more than 6 months to 1.2 years. In the current phase, we are already in correction mode for more than 7 months right now. And looking at the historical data, we might even consolidate for another 6 months, which is more likely to happen. So it's better to stay invested and accumulate good stocks at good levels. If Nifty corrects more than 20%, it would be a great opportunity for investors to accumulate some good stocks. Because if it corrects more than 20%, Nifty PE would be close to 20 or less than 20, which will be a great opportunity to get good stocks at a proper discount. Key takeaway is that if we zoom out and if we look at the bigger picture, we can come to a conclusion that we are still in a bull market and there is more steam left in the market right now. Because being a growing economy, India might have more to grow in the upcoming days. But the correction duration might take a bit more longer because of the current market situations. Because there are many problems floating around right now. The US Fed interest rate hikes, US inflation data and India inflation data at peak high, and the continuous FIA ceiling. These things will pull our markets down for a few more months. So in order for these things to get sorted out, we might take another few months until the next rally continues. Until then, all we can do is hold and keep invested for the long term. And if you are an option seller, you can hedge your portfolio by taking some trades in options as well. So the overall view is we are still in a decent bull market and this correction is quite healthy. So stay invested. Thank you so much for watching the video. Until next time, cheers.